Everybody, great to be back with you here for our ThinkScript class. My name is Mike Fairborn, folks, and I've missed you guys. I've been out on sabbatical for a little bit. You might have recognized that or known that. I've been out for about a month, but this is my first time back in this class in a month, and I do miss you guys and recognize the names. We've got Robert, we've got Riceberg, David, Kelly, and Nitin. Good to have you all here. Folks, I'm joined in the chat too by Rachel Duchelle. I really appreciate Rachel being here to help out with our ThinkScript class today. You can follow us both on X. Now, Rachel's is Rachel-CS. Encourage you to follow her on X. Mine's just Mike Fairborn CS. And so with that today, hey, I had some time to think about, as you can imagine, about some scripts that could be interesting, something we haven't used in the past, and that is really looking for those trends that may have been more established over a longer period of time. I'm referring to actually what was looked at earlier, several decades ago, actually known as the turtle traders, an experiment they used that they considered to be pretty successful. Nothing's 100% in the market, but it was a way to define if a trend is really a trend or it's just sort of a fake out and prices may continue to trend on down or trend on sideways. So I want to incorporate that into our analysis today and look forward to doing that. So that's just kind of a general review, but we're going to take a look at a scan here today. We're going to look at some chart labels to help us along the way as we define this. All right, well, having said all that, let's dive on into our discussion today. But first, let's hit some disclosures. So I want to state here that information here is for general information purposes only. Schwab does not recommend the use of technical analysis as a sole means of investment research. Paper money software application is for educational purposes only as well. Now, backtesting results that we do look at in this class, that are presented are hypothetical, and there's no guarantee that the same strategy implemented today would produce similar results going forward. Investing involves risk, including for some products more than your initial investment. Past performance of any security strategy does not guarantee future results or success. Now, there's a list of futures disclosures items because we do reference futures. We don't trade futures here, but we reference the charts. Futures and futures options trading does involve substantial risk, is not suitable for all investors. All right. Well, as a quick note, and to get everybody back up to speed as to what we talk about in this class, we do discuss, here's just some general steps to ThinkScripting that we do like to review and just to show everybody, particularly if you are new to this class as well. So it's very important to identify a goal, and then we try to provide that coding, that information to the computer to help us reach that goal, right? Can it meet that goal? Generally, what we'll talk about too are, in a lot of cases, technical indicators that we can kind of shift and change a little bit to meet particular outcomes that we want to find. Now, we can do that with today's script, which is really based on the turtle traders and what they looked at specifically, which was a 20 or a 50-day or a 55-day new high. So a new high on the stock, and that's different from a moving average. So we're not using moving averages. In fact, we're using price channels, also known as Donchian channels, that will give us a high level. What we're really talking about here is if prices are going up, we're looking for maybe potentially a sideways range and then a breakout above that level. I mean, the breakout's not going to be that high. We're trying to catch it before that breakout occurs, but it's kind of an extended range. And interestingly enough, that's what the turtle traders looked at over a 20-day new high and a 55-day new high. One short term, maybe a little bit, some would state that as more aggressive. Some would state the 55-day a little bit longer term. We're going to break that in a little bit more detail, but I want to tie this into the scripting so you're kind of starting to piece this together in your minds already. There are some other rules that they did use, and I'm going to mention those as well, so you have those down. But as you go through the process of that ThinkScripting, you want to see if that works, if there's something we can do. And I just mentioned, there are technical indicators that help us with that. Price channel specifically, we do apply ThinkScript tools. So I've got a few of those that we will go through. The scripts have been written. It takes too long to actually write them, although we can write portions in the class if there's any need to do so. We've done that. We test them, and I will share the links at the end. So you got them both. And I think they're quite interesting to have as a way, as I mentioned, that these individuals would look at trends and say, if it does this, we define it more of a trend that is more likely to go higher than not, according to the Turtle Traders Group and their methodology. Okay, so they can be combined with a number of different indicators, but there you have it. Okay, so let's move in. Take a look at our charts right now, and we'll just briefly look at the S&P 500. You can see that the trend clearly is to the upside. We pulled back a little bit, and I'm sure you've heard this many times today, so I'm not going to go through it again. But yeah, hey, maybe there's a prior high in there. Whatever the case is, we've been making some higher highs and some higher lows for a little while now, haven't we? The trend's been up. The turtle traders would look at upside moves, stocks making a 20-day new high, or downside, or 55-day new high, or new lows as well. And that's something we could look at. I could easily create, and maybe that's something I could do down the road, is looking for a 20-day new low or a 55-day new low. But with the market being up, I've decided to kind of stick with that trend, generally speaking. We're going to be scanning through the S&P 500. And so I want to look at stocks that kind of fit into that scenario. That is the upward trend. So let's talk about it right now. Let's break this down into more detail as we dive on into this. Now, a couple of things to look at. I'm going to just use Datadog, which is one that did come up on our list today. Okay. It's a big move. They won't always be this big a move, but I want to just highlight this as we come on over here. We're going to have some that didn't break out nearly as much, but we're showing breakouts based upon the turtle traders. And basically what I'm just going to show you right now is if I just point right here and go back in time, you can see that there's a 20-day new high right there. You see that? That was the high over the past 20 days right here. As you can see, the window, it's the second line item down. You got calendar days on the top. You got market days just below it. There's 20. We broke that high over the past 20 days, and this will come up as an indication. But you'll notice it's a little bit different. It's a breakout over a range, and that's totally different from stocks just making 20-day new highs. If we just stick with the 20 for a second. Notice over here, for example, we could say, hey, that's a 20-day new high. That's a 20-day new high. So is this. And so, I mean, it's making it over the prior, if you go back over the past 20 days, was this new high over the past 20 days? Yes. How about this one? Sure was, sure was, sure was. So what's happened is, they're getting a little bit long in the trend, and that's not necessarily an ideal entry point. So what's different with the traders is we're saying we want to have a dry spell. We want to see prices come up and just start to take out a level over the 20-day high range. What was the high over the last 20 days? Well, we started taking it out here. It's interesting because it's actually a refinement or an addition to an already interesting price channel. They're giving us the numbers, though. They're saying 20 or a 55 high range. And that could go back over a longer period of time. Like say, for example, if we're going over here, yeah, we might be looking over to the 55 bar range. But that is how they defined those trends. All right. Now, I'm going to show the chart edition first in here to kind of help us along the way. Then we're going to break it into a scan and go from there. Actually, you know what? Before I do that, I need to mention that if we are getting that high range over, let's say we get a breakout down here early, okay? First of all, with this script, I said, let me know within 5 days of the dry spell breakout. In other words, hey, we're clearing, it's not one of these over here where we've run up so high. It's just 5 days. And we can alter this right in the script itself. The reason why is because, clear that off one more time, how many times have you seen stocks do this? They'll break out above the range, and then they might consolidate. By the way, great case in point right over here, where there was a continuation of the trend. You saw us break out. Okay, well, there's your breakout right there. You cleared above those highs. But what happened over the last 5 days? How many times, folks, have you seen that? I can tell you, I've seen it a few, where you'll come back and you might test on that prior high. In fact, a lot of traders will suggest that, when you get a breakout, it doesn't just go like this. But many cases, it will come back down and test the prior high before it starts to, kind of move up again. particularly after a dry spell. So it doesn't have to. We're going to know between 1 and 5 days if that is the case. And so we're really just trying to narrow this down to that breakout. We don't want to see one of these that have been going on for a while and say, yeah, my gosh, that's a new high too. No, that's not going to work. Okay, so that's part of the script. Now, some other quick notes. How did they exit the trade? This is the scan is designed to help us find it, but they said if they have a 10-day new low, get out, which was a pretty long sort of an potential exit strategy. In other words, even though this is kind of a volatile company, I mean, you need 10 days, a 10-day new low in order to get out of that trade for the 20. So I just wanted to go through their potential exit levels. So a 20-day break was looking at a 10-day low. So once you got the breakout, where's the exit, potential exit? A 10-day new low. Now it's different for the 55. The 55, I'll swap some colors over here. The 55, a little bit longer time frame. 55, okay. They were looking for, if I got a 55-day new high, then they're saying, I want a 20-day new low. Think about that for a second, a 20-day new low. That's a little bit of a pullback. So a 20-day low versus the 55 breakout, that gives it a while, doesn't it? I mean, you're giving a lot of flexibility for the trend to go up. Now, we don't have to use that, but we're trying to, in this scan, we're just saying, hey, maybe if we've got a 55-day break of a high, or a 20, it might carry with it some additional significance, at least through the eyes of a turtle trader methodology. Okay, they're saying those are where the key trends might come in, 20 and 55. Okay, according to that approach. So we wanted to tap into it. Now, one interesting thing too, they'll state, by the way, with this strategy, is this going to let the prices run? If it's going to trend for a while, it could be, it's a trend trading system, isn't it? This could go up for a very, very long time because, you're giving it this range. It has to have quite a big pullback for it to get out. So it doesn't mean that you'd have to wait that long. You can use other tools as well. Today, I'm really just focusing on that entry. One last key point, because I want to describe this before I provide it all to you, and then we'll just head on into the script right after. But they would only say that they're only willing to risk 2% of their total portfolio or their total capital. All right, so a lot of times they were using, very, very large funds in the millions, but that is what they would risk on the trade. So they would kind of, they would have a level in there that, well, they don't want to risk more than 2% of their total portfolio. So with a large portfolio, you could still have that 10-day, that 20-day pullback without getting, being in a position to exit. Okay, well, let's get going. So let's do this. I'm going to go over here and I'm going to type in fact, we can look at Datadog first, but here it is. So this is the turtle trader labels. I'll throw these guys in right here and I'll show you what it's doing. So what it's going to do is going to go and highlight exactly on the chart where you're getting both a 55-day, or a 55 or a 20. And you'll notice that you got a 50 here. It puts the labels on. Can you guys see that? We can change these colors real easy. It's sort of easier for me to see, and we can change these if you need to. It's going to show up pretty clearly on a white background because I've actually got the text in black, but it might not always come through. This is, you can see it puts the 55 just above the 20, so you can just see that had both, but it lets you know, is it more long-term or more short-term when it comes up? Here's another one that came up. Let's see, PH came up, and you can see over here where the 20s were. Now, why would this be interesting to have on the chart? Why could this be useful? Well, because it'll show you, and look at this right here. So here's a break. Where was it breaking above? You got it, right above a major high point. So potential turning point. Now, did we have to take it there? Absolutely not. Let's look at our own methodology, how we're trading, but it's a good signifier that, oh, that was one of the turtle trades methods right there, right? You saw it. And what did you get after that? You got an interesting consolidation right after that 20. Well, we got another 20 right there. And again, it's based upon that longer term trend trade, although that is the shorter term version of it, with that shorter term potential exit, the 10-day new low as well. Does that make sense? It's a There's a dry spell in between there is what we're identifying. We're not looking for one. I mean, this, I don't think there's a ton of value to this necessarily. It's just a new high range. You could say 20, 20, 20, 20, 20. I mean, all the way through here, but it's got to tie into that Donchian channel concept. Okay. So that's that. It will paint them on there. So whatever chart you're looking at, that would be sort of a turtle trader indication of a level being crossed. Okay. Now, let's go over here. And by the way, look at this one right there. You just broken above. Remember, we had the pause. We said within 5 days. So running this on the scan, which we're going to go through right now, you could have seen this right over through here. I mean, there was a pause. Again, it broke, but then it paused. There was earnings, so I realized that it was sort of framed under a good earnings number there, but I think you'd had good earnings along the way for a bit, at least the prior 2 quarters. Okay, before I go any further, I always want to make sure I'm sharing this. And by the way, as I share this with you guys, let me do this. I'm going to put this, let's just share it right now, into the chart, the chat window down below. Now, just a quick note, ThinkScripts aren't guaranteed for timeliness or accuracy. However, as long as the data that's flowing through to the platform, I think we have really good data, pretty good data. I haven't seen any issues. As long as that data is good, then the ThinkScript should work. That's just kind of a note I wanted to state, but it's not guaranteed for timeliness or accuracy. There you go. I mean, there's that component too. In other words, it's not always going to work because nothing does work all the time in the market. This is just their way of saying, we think we're dealing with a stronger trend, and now you guys get a visual of this. Okay, we should have time at the end to go through some of these details, but of course we just have sort of the code references up top here. This, like I said, it seeks the 20 and the 55. The dry spell was the one that I had to work with. It took me a little bit more time to fit in here, but we got some of the numbers in place, and I did actually have a little bit of use a little bit of an ATR in there as well. But there you go, folks. And by the way, of course, this will always be, if you want to find this, if you're viewing this in the archive section, you've got to look in the description section under this video in more. Look under more, click on more. It's further down just in the description field, and that's where you'd find it. Okay? Now, let's move to the scan so we can see what's going on in the markets out there where it would fit into this criteria, this turtle trader criteria for either of those two. All right, so we're going to scan in another key point. Where are we scanning in? You know what? We're not scanning in low price stocks. We're not scanning in small cap stocks or penny stocks. We're scanning in the S&P 500. Now I'm going to take out the utilities here because I want to look at the full S&P 500 right there. Okay, so it's already a basket of stocks that we might feel could be a little bit more established. I mean, there's criteria that need to be met to be on an exchange. So just some ideas, what we're looking at here on those companies. Of course, this could be expanded. Of course, there is the NYSE in there. If you want 2,700 plus companies, of course, that would be in there too. In the scan tab, and key point, we have to be in the stock hacker portion. There are a few sub tabs to click on, but we're not there. We're just right there. That is the default, but you've got to be in Stock Hacker to do this. Next up, I'm going to go and click on Add Filter, and we're under a study because it is a ThinkScript study. And within this study, we've got to click on our pen right there, pencil. We'll pull this up, and this is where we would paste this in. Now, I've already saved it, and you can do condition wizards in here, but anytime you wanted to create a script, folks, knock yourself out. You can do it here. There's some cool stuff you can do in the condition wizard. This one was tricky in a sense. It did have some coding that I felt worked quite a bit better than what we're seeing just with the condition wizard. So anyhow, let me just go into it right now, and we'll load this guy up. We're down in here into our turtle trader right there, and let's scan it through. Now, keep in mind, this scans for both 20 and 55 day. And that's exactly why I put over here a reference here on the chart so you can distinguish which one is which. is it shorter term? Maybe a little bit, some would say more aggressive. Is it longer term? Is it more conservative, looking for a longer term trend? That's what we would look at. There you go. So Datadog comes up in there. There's no particular order. Oh, I guess it's on a 5% day change is what it's listed as here. But there you go. You've got some in here. I'm just going to go ahead and take a look at a few of these. I want to look at maybe some of the discretionary. That's a discretionary. BWA is, let's see, Host. Let's see, Marriott. That would be one as well. You got PH, Amazon's in there. You see, so recognizable. There's Tesla's in there as well. So let's pull these up. Let's pull up a few of these. That is the PH right there that we looked at. But here is BWA. Okay, can you see kind of the scenario, the setup that we're looking at right here in terms of why we're getting those numbers coming up? You got a 55, you got a 20 right there. It's right at that point. Now, does that mean buy necessarily? I mean, no. I mean, you guys have a lot of different criteria you may be, in fact, looking at when you go through here, right? But is that breaking above a range? Does it meet the turtle indication that they would spot as, well, that would be considered based upon what they were looking at an entry point? Yes, it does have that based on that. So that's like an example of what they might be looking at right there. Now, there's your breakout, but what do we say? Use your other tools, your other indicators, RSI, volume indications, things along those lines. But hey, there could be a test and a possible bounce or whatever as well. A lot could come in there. One thing I will say is we did get past earnings here. It seemed like the market was good with the earnings because we did take out those highs right there as well. Now come over here with me. You got the 20, you got the 50 breaking above what? Oh, kind of a mid-range. That was a mid-range move. We extended higher, sideways, we broke again. And after a 1, 2, and a 3, well, there was a pretty good trend that followed. Now, of course, you'd have to say if earnings were terrible, it probably would have not done as well, perhaps. That's probably a straightforward point. But keep in mind, too, that that's the expectation. And you're kind of looking at earnings actually performing in line, too, because or better than expected. Because remember, on these trend trades, you're holding for longer moves. Now, you guys might not have done that, but the first thing I look at, because of the swing trade class I teach on Tuesdays, is this over here. Just like this move here and this move here. And this reminds me exactly of what Rachel talked about in terms of her class, trading patterns, price patterns. I mean, in my mind, we're coming off of a lower point, but there might be some indications of a change in trend, maybe a little bit more powerful, 2055. Could you possibly see this as a bull flag pattern, longer term? It'd show up pretty well on the weekly chart, maybe a little bit better. But look at that. Did it hit maybe that criteria? It probably did. I'm just eyeballing it, but maybe over here, the pattern objective was met, the price pattern of that flag. I'm just taking this price range, shooting it over here. I maybe shot up a little bit too high, but there you go. So a little bit of confirmation, longer term flag. Well, at least from the perspective of the turtle trades, it's not an end-all be-all confirmation. It's just what they were suggesting is, hey, they think it's going to be stronger. So there you go. Okay, so that's kind of an interesting one as well. Now Tesla is in this basket, and lo and behold, what are we getting? Are you guys seeing a common theme in here? What were these guys looking for? They were looking for that longer-term consolidation. Now, that is one Rachel talked about, and I don't know if it was the stock, but like a triangle type pattern, right? There you go. There's your break. Some would say you want the break, but maybe you're getting an additional TT, turtle trader indication right there. You're getting another one as it's taken out that high within that triangle, and it was a pretty nice follow through. My point is, folks, is we're looking at that consolidation, and that's what they were looking for. They wanted to see strength, but they also wanted that consolidation in there. They weren't looking like getting in. I mean, this is where they're trying to build their profitability in this range because they're already in the trade. And how did they do that? Because they're capturing it early. okay? But it is after a consolidation. What other ones did we get? Keys is in there. Now, Keys was going in a long-term consolidation that I was looking at in our swing trade class for a while until I just, gave up looking at it. But this would be one way to run this scan to see it. That's Key Insight Electronic Equipment. I want to look at that one, and let's just do a few of these. I mean, these are just very interesting to look at. It's a small basket, only 26 out of 500 that we're getting. But let's click. Okay, here's Keys. There we go. You can see the consolidation I was talking about. It was right over here. I thought we might, hey, it could be a flag pattern over here. We just kind of paused, some indication, and you finally got the breakout. But not after it was really in a side. And that's an earnings move. You see that gap down on earnings. But that's one. I think that's really, this is a very, very volatile stock, by the way. EXPE, Expedia. Wait, EXPD, I'm sorry. I thought it was Expeditors. PD. EXPD. Yeah, Expeditors. And while I'm at it, let's look at Lilly. Let's just change this to a D. That's, by the way, in a sideways range, is it not? And we would likely get that signal right over here if it met that Turtle Traders approach. So kind of a cool way to do it, to see it. But there you go. Okay, so obviously, a key break higher on the move on the upside. Yeah, there's a lot of volatility there too. Maybe a little bit less with something like a Lilly, a pharmaceutical. Yeah, you can see us taking out some of the prior highs. Now, this is off the downside move, but did it identify anything here for you? What did it identify? You know what I can say over here? First of all, we got a 55, which is pointing to this bar right there. That's the breakout. You can see it's a little bit off to the right, which I set up the labels to go over to the right-hand side, up and over, and just kind of point to it a little bit. But with this, we got actually a higher high and a higher low, confirmed by that Turtle Traders number. There's your pullback. I mean, you start getting Caholds over here, trend line breaks above moving averages. It could be interesting. Of course, that was earnings that kind of drove us higher, but I'm just looking at this and saying, gosh, that was a pretty interesting flag setup right there, right? Low to high price, take that same price and measure it off of the low move. And that would have been another interesting flag. I didn't even see it, but this is going to be a cool scan for me to run actually for that that swing trade class. All right, folks. Hey, first off, let me share that. But if you are getting value from these discussions, if you guys are finding this helpful and useful, particularly, in today's case, kind of trying to help confirm as a way to help confirm or reference what the Turtle Traders said through their confirmation of a change in trend. If you're finding that helpful, useful, smash that like button. Let me know that these kind of classes are helpful, at least in terms of what you guys may be looking for in the trades that you do. I'm always open for suggestions as well. And I do get the suggestions off of, it looks like, I think there was a provide the feedback in there. So I love that feedback. If you do have anything like that, love to get that. There's a little comment section, and there's a very short survey. It's only 2 questions, but great. Okay. Well, I wanted to point that out to you. And let's do one more, and then we'll go through this. What's healthcare equipment? STE. STE. How's that doing? Okay. So there is that breakout right there, as you can see, on something like this. Now, notice when you look at these patterns, some of these companies are doing like this much more frequently, right? Just on the chart. 1-year chart, it's pretty frequent. It doesn't fit as well for, let's say, a 55 day, 55. I might have been calling it 50. I apologize. It is 55, the 55. So if you're getting that sort of character within the trend, and that's just sort of the ebbs and flows, the 20 just might be better suited for it, honestly, as opposed to the 55. Okay, cool. Well, we hit a few of those, and let's go ahead and just take that scan, and we'll run through this right now. And I want to look at that scan, and we'll break down some more details. And again, not guaranteed for timeliness or accuracy. Here is, I'll just state this. This is the scan itself, and you can put it in, and I'll show you how to adjust the scan a little bit. Again, that'll be in the more section, just under the description, under the video. You just scroll at the bottom and I'll have that code listed down there for you for those that are viewing this off of the archive. Now, let's pull it up right now and go through some of that ThinkScript and kind of talk through this in a little bit more detail. I try to refine this as much as I could so that it wasn't too far out of whack and too crazy. But up top, as we always do, we've got the trading references that we reference throughout our discussion here. And notice, these numbers could be changed. If you ever want to change them, you have the ability to do that right there. I've got that short term. And again, it's the 20. Maybe some would say more aggressive. There's the 55. This just matches the turtle trade, 20 and 55. But this scan is flexible enough if you guys wanted to change these to whatever you were looking for. Shorter term or whatever the case is, aggregation period. The turtle traders used a daily time frame. You could certainly use different time frames if you wanted to, but you know, that just sort of depends. If you, let's say for example, if somebody was wanting to find, I'm just going to throw this out here because I do know people do look at like 30-minute time frames, and they're looking for this kind of a move, like a potential. You'd have to say extended, sort of a price pattern, bull flag type setup. Could be a triangle as well on a 30-minute chart. Well, you have the aggregation to change all that right at your fingertips. So easy to do. Right? Yes, and by the way, Rabbit says, yeah, you can click on the chart for options. You can change some of those as well. It's just to get you what the turtle traders were using. Okay, so what we're referencing in here, I've got the dry spell bars back, and let me explain exactly what this is doing. And I've got a reference down here as well on that. And basically what we're saying is, the way I positioned the dry spell bars to get the sideways consolidation was, you know, you're going to have at least over the past 20 bars, we want to have 15 of those, the last 15 bars that did not make a new 20-day new high. And what does that do? This is how you talk to ThinkScript. You've got to think about what you want to do first, and then kind of create that code. But all you're simply doing is saying over the past 20 bars, you're saying, okay, so the 20-day high, the high range, you want to say over the next 15. You don't want a new high to occur, but after 15, yeah, fine, 15 or greater, you're good with that signal. What that does is it stops this from happening, because these are all 20-day new highs along this whole stretch of a trend, and that's not exactly useful. That just gets you companies that haven't provided maybe entry point potential that you want in terms of maybe a bounce off support. Okay. So this is just kind of the refined code in here that I've got. Let's go through it ahead and just take a look at a few of these here. I've got the close breakout. Now, this was important too, because if you want to change this, you can say it can be a close. I have it as yes for confirmation. So in other words, when you do hit that 20-day new high or that 55-day new high, you actually have to close at that level. Some traders might be fine with just the intraday high. All you want to do is put no in there, and that would alter this, at least going back to the prior day's close and referencing that high. Okay, so just added that in at the very end, because some do look at intraday breakouts relative to highs. All right. Next one. So on our 20 period of range, the highest high going back one bar, you can see over here for a 20 period. We're just looking at the number of days in here, and this is actually being used as a reference point for that breakout. Breakout points down below. Okay, just the simple code the 20-day and the price prior day is less than or equal to the 20-day new high. Let's take a look at the NASDAQ. Oh, not the composite, just the NASDAQ. Let's say the NASDAQ 100. We could easily use this too if we thought there may have been some consolidations out there, whatever the case is. I'll just show you how quickly we can pull that up. So we get 8 companies out of the 200 in here. Some of those are repeats. There is BIIB. I want to look at that, as well as IDXX, both in healthcare. That has been one area, by the way. Just I'll show you this real quick. In terms of a sector rotation grid, I'll put this link down here as well, so you guys can access this too. In fact, I can share it too online. But you notice over here, healthcare relative to the market, to the S&P 500, has actually been doing. It's like the whole price pattern within all those companies in the S&P 500 kind of look like they might be in an area where the whole group could be making a 20-day new high or a 55-day new high if, in fact, they break out higher, right? So I just wanted to take a look because I'm seeing that. I'll share that right now. It's not a think script, but it's just, these are just grids, but there you have it. If you want that, and I'll put that in the description field as well, but referencing where we're seeing strength relative to the market. So outpacing the market, healthcare has at least been going sideways. Tech has been really quite strong. So is discretionary, and you'll see some of those companies in here. But let's look at IDEX and Biogen. We'll pop back to our chart here. Just pulling in sector analysis as well. Okay, there's BIIB. Long consolidation. Here's the weekly chart. Ooh, been down for a long time. But can you guys reference what this might be showing us? Why it's coming up right now? When was the last time we broke above a new high? Wow, it's been a little while. On a weekly chart, I'm seeing it right there, and we're getting some of those turtle trader indications down here. Does that mean it's going to go up? Not necessarily, but it's something that we could look at, you know, and see based upon our other indications too. So that's sort of interesting right there. Some would say that, but we haven't seen that for, well, beginning of 2023, really. Got a big round number at 150. We just broke above that level as well. I don't know if it's going to hold that level or what the case might be. IDXX, the next one. And, oh, it looks like that one just had broken out of a sort of a, wow, I didn't really, oh, wow, that was a very, very long term sort of a signal there. By the way, I lost my turtle trader indications. As soon as I put those on, it will show up. So, because these will line up. There you go. Yeah, these are going to line up with the scan. So I went back through and just triple checked that. They line up with the scan, and there you go. Those are some of those. But there you go. That's kind of a longer term one with, gosh, that's a long consolidation, isn't it? And just a big gap. That was hard to participate in unless you're going to, you know, play through earnings there. All right, you guys. Well, that is what I had for today. I wanted to incorporate these turtle trader methodologies so that you could see those on the chart and you have the ability to scan through those. I want to state this too. A lot of what the turtle traders did, they went for those really long-term moves. A lot of what they did initially was based upon some of the futures trades. Now, we don't do futures trading in here, but that would be something you could run it against. You could scan across the futures and just see. Because sometimes these futures, they'll extend for, I mean, they can go up for years or down for years. And what these guys would do is they would see that 55-day break above, and they would just simply hold with that until, you know, it got that sell signal. So maybe some of those longer term trends, and I know we've had some volatility in the market, but companies that might have lower beta as well, beta indications, they could be also, you know, this could be the staples or whatever, but if you were just scanning for staples, something like that might pop up. So, all right, everybody. Hey, if you liked today's presentation, smash that like button. Be sure to subscribe as well. Thank you, Rachel, so much for your help in the chat today. It was great to have you here. Folks, it was great to be here with all of you. Really happy to be back after such a long period of time. But, yeah, take this, incorporate it in what you guys do. Hopefully it can help you out. That's the whole idea. All right, everybody. Have a great rest of the day. See you next time.